All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for November 30th, 2023. This is a quick look at the current lineup so far of the Q&A sessions for the research workshop for 2023. In this room, in this link, the ones we have scheduled so far, Bill Scheit is going to do one on the blended monthly rebalancing, modified, how he's been trading that for 15 years. That's going to be on Sunday from 9 to 10:30. So that's when I normally do the foundations check-in, but I'm inviting all of the foundations students, past and present, to listen in, because you're really going to want to listen and learn from how he has been managing his longer-term portfolio using our principles of blended monthly rebalancing. Jim Carroll, a pro money manager, is going to be briefing on a volatility breakout system that he uses in his professional practice with his high net worth clients. He's been working on volatility systems for well over 20 years, is my go-to guy when it comes to working my way through understanding volatility and how it affects trading decisions in large portfolios from people who are either hedging or looking to gain an opportunity. Tom Hardison is a master of building leadership teams and accountability groups, and this will be his second presentation on his lessons learned leading accountability groups and building collaborative teams as part of he does that for a living in corporate America, and he's also adapted those ideas into his own trading and has been a long-term member of our True Storytelling Circle. He's a certified true storyteller and just a good friend and just full of wisdom, which you would know because you can see his 2022 presentation already, and it's phenomenal. Hamad's has done a great job on documenting his trading so far for the last 6 months in foundations. Everybody that's on this list is a student of ours who is reporting on their work in progress. Matt Richardson is a pro money manager working with Gary Antonacci. Sonal and Jeff are with the Society for Technical Analysis in London. Sundeep has been working with me for almost 20 years. My brother, Luke Crockford, our accountant down in Australia, he's going to show some work on the 5-minute Aussie and also on the trading the intraday DAX with a mechanical system that is just going to blow the doors off your brain. Dan's talking about options trading. Phil and Griff are working on COTA 2 challenge insights. Phil is going to give a presentation on the use of EdgeRater for backtesting. And he's going to show some data on our mechanical swing systems, which are all of them are positive expectancy, and he's going to show how to use EdgeRater as a backtester and also how to work with its templates in finding and screening for targets and auto-framing them as well. So a really powerful and interesting presentation there. Kyun and Chun Long have both been through the Foundations in the Creativity 202 course, and they've done just a great job of showing their work in progress as Van Tharp Institute super traders and how they've been incorporating that and our ideas together to develop their trading plans. Very much a work in progress and a realistic view of what it takes to acquire this kind of knowledge. Now, that's not all that's in the workshop. That's about 30 hours of presentations, and then plus the recorded Q&As when we get done with them. But at the same time, we've got a bunch of material from previous years. I've got about 100 hours of research findings that I consider to be like the best of from Foundations and Creativity. And then we've got a bunch of stuff from previous years that hitting the highlights. So there's, well over 200 hours of amazing material that you have lifetime access to, and there's still time to get on board. And again, if you're in the sound of my voice and you're a Foundations student, you can attend these. If you're not in the research course, I just ask you to defer to the other folks who have paid to be there and who are got priority on getting questions asked. So be good citizens, and then use that as a decision criteria to see if that's something that you want to add. You can get lifetime access to this, so there's always a chance to add this to your coursework as we go. So that's that kicks off on Sunday at 9 a.m. Central Time in this room with the same password. Let's see. Let's get to the hybrid swing trading portfolio. And that means, as always, we're starting with Alcoa on 30-minute charts. And so today, let's see, it closed here. It gapped up to here and then took off, took out the peak of the RL10. So we got long here with a standard risk box. It ran up to make a new 10-day and high, and then started rolling over. Probably gave back too much, but we cashed that much, which is about 0.5 R. I missed the follow through to the downside, and I missed the afternoon recovery. Both of those legs were tradable on the 3 minutes, but not on the 30-minute. I had better things going on at that time. So that's Alcoa. AI. There we go. AI was a collapsing dragon. So here's the pattern: a peak, lower highs. That makes this a collapsing dragon at the PSAR flip. It opened here and then immediately dropped like a stone and closed here. And then when it started to fail again, it got short with a collapsing dragon because it's underneath that resistance. Standard risk, and that hit the sweet spot. And then when the R10 reverses up, then I invoke the skin of the dragon exit, and on that much risk we earn 3R, and this set up for a nice zero state breakout move in either direction tomorrow. So that may be our standard number one play of all time for this portfolio, is that you take a big bite out of crime in the middle of the day, then watch how it closes, and if it stabilizes, then that tells you that the panic is over, and now it'll be equally distributed between buyers and sellers looking for a short-term opportunity. So that's our play for tomorrow. Amazon. This was an interesting one. We closed a scratch trade yesterday, and then it gapped down all the way to here, sold off, and then started resuming. So it had moved a risk box off the low. So I bought it thinking it could close the gap, which it did. So we cashed it. And then it gave us a doji. And then as it continued to fail and weakness in the market, we got short, standard risk. At the bottom peak, at the point of the RL30, invoke the edge of the dragon exit, and so we take that exit, and that earns 1. A simple rule that keeps us in long enough to give it a chance to fail further, but also preserves profit. Pretty much what you want in an exit strategy. This is a 1, 2, 3 entry in the afternoon in Caterpillar, and that was an opportunity to bag about half an hour. Cliff, this was a breakout from yesterday's high. Moved a risk box off the low, bought it on strength. It ran all the way up here. When the R10 rolls over, in this case, I took the VWAP exit to lock in a full R. Missed the afternoon trade. CVS, tried the PSAR flip, SSC, scratched. Disney, no trade. Dish, no trade. Devon Energy, this was a big gap up, and it rolled over, and when it crossed the VWAP, took the short with a standard risk box. It slammed all the way down through the dragon, through the Bollinger Band mean, out the edge of the dragon, all the way to support, and then at a 1, 2, 3 exit, also at the edge of the dragon. So this one earned 3R on a really strong directional move in energy. It's why Devon Energy is one of my favorite intraday traders. Electronic Arts, no trade. Emerging markets, no trade. Ethereum, no trade, although the short was there for those of you that can trade directly in the currency. Mexico had my attention all day. Beauty. Gapped down to here, sold off quickly, 1, 2, 3 entry at the edge of the dragon this time. I take a standard risk. That goes like right down to the bottom of the day, and it moved strong. After this little hesitation here, it continued to go, so I added a second position at the 2R battle drill. Convenient. It gave me another R, and I was content with taking 3R on the first one and 1R on the second one, so that's a 4R win and no overnight risk. All day. Every day. Here's 2R, basically the same pattern in Mexico, although that didn't manifest until noon. And then you get the reversal here, the RL10. That's an entry at the edge of the dragon on a 1, 2, 3 entry, standard risk, 2R in the last half hour of the day because I didn't want overnight risk. Intel tried a supported fall crossing, basically scratched, no follow through. That bodes well for a possible COTA 2 tomorrow to the long side on failure to fail. IP, this one just is the gift that continues to give. International paper is a trading vehicle. Now, where do you find that information? Who's writing about that? I don't know. 4, 5, 6. This is 7R on the first position. This closed here. This is the gap up, and a gap up and go, so add a second position, and it closed well. That one's up 2. So this is 9R on 2 positions in 2 days. International paper. What does it look like long term? Beauty. It's pushing the 150-day high. But it's only halfway to the top of the stack at 42. So this thing is ready to go. That's a decisive move to the upside, and it's above the previous double top peak of the RL10s. That says the next target is the top of the dragon at 39.60, which is another 10% move, and then top of the RL10. And if that breaks, it's going up to 43. So international paper, fellas, it's a trader. U.S. real estate caught a 2 for a fraction. Coke, uh, SSC supported spring crossing intraday. This was the one we held overnight, and then like clockwork, it gapped down, sold off, and started to reverse. So we got paid for holding that gapper overnight, and that returned 3R. And then during the day, it gave us like a SSC, and as part of the S&P's major move, this is Coca-Cola. It gave us 2R in the afternoon, and I decided to hold that one overnight. Regional banks, no trade. Mattel, we closed the long from yesterday, or 2 days ago, I should say, for 3R at the usual spot. McDonald's, beauty. Big gap down, missed it. But then when it recovered with higher lows and hit the southern skin of the dragon and the R10 was rolling over, speculated into it. It finally got moving. And as I was looking for a place to get out, this is when the market exploded to the upside, especially the Dow components, and McDonald's benefited. So I held my nose, added a second position, and it really paid off. And so we're holding 2 positions, and I expect that to have a good chance of going all the way to 284 tomorrow. Merck, just continuing the 2-day trade that started as an SSC, and we are about 4R to the good. Microsoft, this was the oddball. It was collapsing dragon short, so I just covered it at the usual spot, and then it blew up and went all the way up to 379 as part of that afternoon madness in the S&P. So we cashed 1, and we're glad to do it. We'll see if it's going to follow through tomorrow. I think it will. Marijuana, this was a real roller coaster, and got out of it with a few bucks. Nvidia, collapsing dragon short, 3R in the usual way. Clean energy, no trade. Rivian got short on the collapsing dragon and crossing of the Bollinger Band mean. This closed poorly all day for about an hour and a half, so we'll hold that overnight. The S&P, again, it was in a downtrend for the last 2 days, and then in the afternoon, boy, did it just explode, and the Dow was even better. So that would not surprise me to see a big gap up tomorrow. Treasuries sold off. We got a little intraday 2R on that one, usual way. Tesla, excuse me, continuation short for about half an hour. It did not participate in that rebound in the afternoon, so we'll see what's up with Tesla tomorrow. I think it'll play catch up. Walmart recovered nicely. I'm holding this one overnight because I think it benefits from the strength in the Dow. And this is like buying Walmart on sale, the same way that we wanted to buy Walmart back here, but couldn't believe it, and then we were latecomers. So this is a chance to get in early at a really favorable price, I think. We'll see how that works out tomorrow. U.S. Steel, just continuing the 3-day grinding move as that long-distance train continues to just chug across America. And it closed very well at the top of the range, which is a new 30-day high, as well as a 10-day high. Obviously, it's going to be a 10-day high. So that's in good shape. It's holding 3R. Really pleased with the effort today. Here's some sniper trades of the day. So now we're on 3 minutes. Here was the close. Here was the gap down. There's the OR3. It sold off hard. It reversed. And it gave me a 1, 2, 3 entry at the edge of the dragon. So I'm long from there. standard risk, standard exit at the PSAR. It's worth noting let's see, 1, 2, 3, 4R. It's worth noting how the VWAP, starts here and then cruises all the way up. So that actually looks pretty good. The Bollinger Band main is starting to roll up. The R10 is still in the summer. So this now sets up, and then right after I sold it, it moves to here. So this is where we can auto frame. Now remember, we got 4R in hand, so we have some markets money to play with. So if I've got 4R, I can take 2 and put it in the bank for tomorrow, and now I have 2 that I could speculate with from this trade. So now the question is, being that close to the R10 and top high of the day, which way do you want to trade? Knowing that your risk box is just that big. So I see some shorts. So where would you want to be short? PSAR? Like that would give you, that would be about a standard risk box. And then maybe you want to be long on the emerging dragon right here. So this is the case where the size of the risk box this thing almost draws itself. And it just so happens that price is right here already. So now the question is, do you just buy it now, or do you wait for it to, sneak just above here? So 1, buy it now. 2, buy it on the breakout. And then if long and then fail, where do you stop and where do you go short, if at all? At 3, 4, or 5? So for me, I'm a 1-3 guy all day on this one. I look at this and say, hey, we got 4R in hand. Let's just go. Why am I thinking about it? I could live with 2 as well. Either one of those is fine. So this is how that decision could have played out. If you had gotten long here, you should exit here. If you were going to get short at 3, you'd be short here with a stop here, and then you'd get long here, so you would have had +4, -1, -1, and then long from here. Check or hold. If you were waiting to get short at 4, like I saw somebody, then you would not have taken this one short. You would have exited here, but not taken the short. So you wouldn't have taken that extra loss. But now we're long from here. And so now the question is, with price right there, and my risk box here, I'm at the 2R battle drill. So now the first question is, where do I put my stop? No lose plus dinner for 2 is 1. This one right here, well, let's call that the skin of the dragon, is 2. I'll let you pick whichever one you want. And then 3 would be a 1 bar low. And then the question is, do you put the second position on here, or do you wait? Do you put it on at 5, or do you put it on a clear breakout at 6? If you're going to buy a second position. Yeah, I kind of like 3-5 on this one. Just go. Come on. And that second position pays off. You probably take that exit over there, so you get a minor boost on that second position. And your first position gives you 1, 2R. Now we're getting into the afternoon. I take the Kata 2 re-entry. Wondering why I don't have a second position on this yet. And then just before the S&P exploded, and in the last half hour, take the I take the 3R. So we ended up getting 4 minus 1 minus 1 plus 2 plus 3. So that's about 7R. And that's if you were aggressive on that re-entry. Now we talked about this a little bit in the foundations course. That is, in this is the case where if this move was all intraday traders trying to use leverage to get a boost, somewhere around in here you expect it to come back and test the VWAP, because that's where they're going to settle up at the end of the day. And so you might say, well, if this just continues this way and this starts to fail, I would not be surprised by a move back to this level. And then that tells you if it crosses the Bollinger Band mean, I could maybe get a 2R trade to here. And we call that the VWAP magnet. Now, when that doesn't happen, it's not unusual to see that the next day is a gap up. Sorry. Because this is all the people who looked at the action in the last hour and said, we want to buy positions at any price, even though it's well above the VWAP, because we think tomorrow is going to be an up day on a Friday, and that everybody's going to see that powerful move in the S&P and the Dow at an annual high, and they're going to want to have a buying frenzy in the morning. So we want to get our position now so we can take advantage of a gap, and then if it does gap up high, so if it closes here and then gaps all the way up here and then starts selling off, we can cover and get a bonus from holding it in a favorable gap. So that's how I interpret this price action here, is that it takes a lot of volume to be able to move the VWAP at the end of the day that much. So we'll see tomorrow. Next one. There's an OR3 and then a sideways chop. I buy the breakout standard risk. 2R. Caught a 2. Half an R loss. Caught a 2. Half an R loss. Caught a 2 re-entry. Where would you get short on this one? If this one fails, where could we get short? We could get short at the PSAR, which is now co-located with the Bollinger Band mean. So we'll say getting short at 1. Getting short at 2 would be a stop and reverse. Getting short at the PSAR, the original PSAR, would be 3. And then our target would be, the low of the day, which would be here. And then that would be certainly a place we'd put a second position on, because now we think it closes this gap and it's going to come all the way back to here. So now the question is, well, I'm long. I know how to manage that trade if it works, but where would I exit? And then is it stop and reverse? Or if you exit at 1, do you stop and reverse at 2 or 3? If you exit at 2, do you stop and reverse, or do you reverse at 3? So let's put your choices in the box. I would stop and reverse at 2, but not later than 3. I could live with exit at 2 and then go short at 3. I could also live with just a wider risk box and just say, look, I'm just going to exit and stop and reverse at 3. 1 is pretty aggressive. Right, so I'm a 2-3 guy. It works. Standard exit. Trusting the PSAR and the rollover. Look how nice that rollover is. The summer turns to fall. You get the P1, that's the RL10 crossing the RL30. You now have an owl. And here's your VWAP. Do you get short here? You only got an hour left in the day, so the answer is no. And that protects you. I mean, even if you got short, you're not going to lose money on it. But this is DIA, and that little sucker just blew up with a speculative 3R trade, and I'm going to hold that one overnight. It takes a lot of money. It takes a lot of money to move the 30 mega caps of the Dow from a VWAP of here to a VWAP of there. That is so much money that was hitting the futures index, and then the follow through was this. I'm definitely holding that one overnight. All right, here's one. This is a 1-2-3 reversal entry in the morning. Standard risk. This was kind of the pattern of the day. Standard exit, caught a 2 re-entry. PSAR exit, PSAR entry, caught a 2. Standard gain. And this one was in, let's see which one. Mexico as well. So that's a relook. Brazil kind of did the same thing. So that was 2 looks at Mexico. Exito. All right, let's take a look at the traders today. Oops. Here's Hamad. He crushed it today. 2.1 in, this is the Euro Kiwi. Very orderly mover. I love the Kiwi. Hits that exit beautifully. Stops and reverses at the PSAR flip. Smash. For 2.1R. AMD gets another 2R by trading the turning points very nicely. Stays out of the chop. Grinds a little bit in Tesla. Learning points. I'd rather see you putting that extra money on the ones that are working, but I also understand not wanting to mix money between the currencies and the equities. And really good self-coaching. I'm sensing a little more relaxation on your part. Keep it up. George is working hard on his AAR and turning these. He's going to turn these into an SOP for how to perform his task so that when he makes the assessment, he can just go right down his little list, and each one of those is a rule, and then he did it or didn't do it, and he's going to make that a green dot or red dot to see if he's actually doing all of those things each and every day that he says he's going to do. That way you don't just have words on a page, but you're actually assessing yourself against a written, published standard. Those of you in the Foundations course listen to about an hour-long lecture on how to organize your assessment program professionally so that you can do routine things routinely, but also you know what to do when you have an abnormal surprise and how to turn that into your learning journal entry and how to integrate that into your action plan. So over to George. This is a sleigh ride. Let's see what we got here. The stop and reverse pays off. His second position, once again, not paying off. He's able to get the turning point, but he's late getting in because he should be here instead of here. And he should be here instead of there. And then he should be here instead of stopping trading. And now you're just trading in the chop in the middle of the day. And that was minus 1.3, 1.7. So this is the sweet spot. We need to be exploiting those early moves. The middle of the day is death. Ilker crushing it in Amazon for 3.2R. Gets the reversal to pay. I think your third trade could start here instead of here because it's crossing the VWAP. That's crucial. But this is still good work and great re-entries and does a good job of finding this reversal and then the second position, which pays off. And then this is just late. We could be inside here when it crosses the dragon on a 1, 2, 3. That's also going to be an owl entry short. And this is good, and then you stayed out of the chop. So 3.2 on that, and then another 3R in Alcoa, grinding beautifully. And then I think you stop too early because you have the crossing of the VWAP. This thing was continuing to go, and you're just now crossing the VWAP, and that lets you experience all of that. So that could have been 5R. But really good job with your measured moves and quick re-entries. It feels like you're playing that correctly with your chip stack, like a poker player. And then 2.4 on Tesla during prime time, stays out of the chop, and then gets the afternoon move. Kurt gets a rebound off the bottom. That's a little bit late. I think you can get the 1, 2, 3 here on the PSAR flip, like at the edge of the dragon. When that thing is so sharp, if you put the MACD histogram, you'd see the WMB3 entry like right in here instead of here. But still, nice job. Good re-entry. And then we got to hit this on a new high of the day. And then that's a COTA 2. We should have gotten 5R out of this. You're expecting them to work, and you let that bottom tick frustrate you when you should have already been in the zero state and smashing that on a new high of the day. Brazil, great job avoiding the chop. Gets the clear emerging dragon after the COTA 2. Hulk smash. This was a little late, but still, you got paid. We might have picked up a little extra here with the COTA 2. And then your dad on Netflix gets the collapsing dragon perfectly. On the reversal of the R10, you can take the skin of the dragon or the PSAR flip, but we let that get back to a scratch. So we should be hitting the exit in here and then stop and then reversing long in here, and then we can smash that. But Netflix in pretty good shape to continue its recovery. Nice work today, fellas. Really well done. Tomorrow's going to be a sleigh ride, and watch for great big early moves. Exploit those, and then we'll see if it has any staying power. Now that this is, remember, the first week back from the holidays, and people are feeling pretty good, there's a good chance for this thing to close very well into the close on Friday. I will be prepared for a good day and a great day, and then also a sideways day. Those are the priorities and the probabilities, in my view. Yeah, nice recovery day today. Look how thin and narrow the 10-day range is and the 5-day range. This is abnormally quiet. This is sniper territory. Recovered pretty well today. Volatility favors sharp moves. Great big gains in a lot of the Dow components and in the ETF components as well. Study those for real strength in the DIA and in metals. So I think U.S. Steel is in great shape. Only 3 auto framers because we're back to fully priced. Only 1 squeeze in Verizon. Dominated by the summer. Look at the broad strength in both the stocks and ETFs. Only a handful of things suffering in the red. Usual suspects: Devon Energy, Tesla, Clean Energy. And that's everything we want to cover for today, except for the most important chart. This was interesting. This is maybe a recovery of if the RL10 reverses, then this can continue, and then this is already going to continue to drift higher. So this could really be an interesting. So the most likely probability, in my view, tomorrow is a early burst and then a decay to preserve that last little bump up. The next one would be a nice run up, a pause, and then a run up into the close. This would be good. This would be great. And then the last one would be a gap up, which then sells off harshly to punish some people that are sleepy. And so that would be a harsh down day. So that's the priorities I would expect. Gap up and fail is the third in probability, but a real possibility. So if we get a nice run up and then it goes sideways, I'll be looking to see from here, is this a sell off? Is it sideways? Or is it a big strong move up for a second leg? So that's going to tell us a lot about the psychology coming out of the holiday. So that's everything for today. Take good care. Consider the research weekend and add some of those briefings to your calendar. It'll be good for you. Take good care, and we'll catch you tomorrow.